The XRP ETF has finally launched. The government shutdown is over. And of course, now we're dealing with a market that is in shambles. We'll break it all down for you today. Don't miss it. Let's get into it. I do want to thank our sponsor, and that is BTCC. It's at times like this where trading in this kind of platform is the only way to do it. So visit BTCC using our link down below. You're going to get a 10% bonus on your first time deposit. There's some other cool features they've got there, including some unlocks and community rewards, as well as some extra bonuses, all by using our link. And also, if you're a VIP user, you're going to enjoy even more privileges. So check it out and start your trading programs over on BTCC. We've started to play with this. We kind of like it. Let's go over and take a look at where the market is right now. We are setting at 3.3 trillion in market cap. Fear and greed holding on at its probably lowest in quite some time as we really start to bump into what could be another extreme fear zone coming in. And I think this is a factor right now that we are starting to play into, mainly around Fed rate cuts, what that's going to look like going forward. A couple of points that do play into this is 5 million airline passengers were delayed or canceled. So this has kind of had a pretty big effect on the economy in general, the shutdown, I mean. 619 billion in federal debt has been accrued. And then, of course, the federal statistical system pretty much permanently damaged. I wonder if the data is even going to be usable coming out of what we're going to see from the government. October jobs and inflation data may never be released, so that is a missed opportunity by the Fed just to be able to understand where we are in the market and the economy. 43 days of economic data currently delayed. 750,000 federal workers furloughed. This is a bigger impact on the economy than I think a lot of people think. This has gone on far too long, and I think it is now starting to show on. And we may see trickle effects coming over the next few weeks as we start to see this play out in the markets overall. The White House announced that the October jobs report will be released without an unemployment rate. Convenient, my friends, convenient. No unemployment rate for that. Let's go to a clip real quick because this is where they are opening the government officially. Take a look.
After 43 days, the government shutdown is now over, longest in history. So that vote last night, you saw all but 2 House Republicans voting to reopen the government. You saw 6 Democrats that crossed the aisle to join them. And then, of course, as you're seeing there, Donald Trump signing that bill last night. And the government's already telling furloughed employees to come back to work today. All of them will be getting the paychecks that they have missed in back pay over the next few days. We're also waiting to see exactly what the plan is for federal data, because while things like the September jobs report, that was ready to go before the shutdown. But as Becky just mentioned, no one was really collecting the data for the October reports. And on Capitol Hill, the race is now on for lawmakers to see if they can extend those Affordable Care Act premium tax credits before they expire at the end of the year. And we'll see if they're able to do that and avoid another potential shutdown on January 30th. Guys?
Emily, they left town again after they voted? They weren't in session for more than 50 days.
Yep. But I think, Becky, there is really a big question because you saw the Senate in this entire time. You saw them move forward with major defense bills. You saw them make progress on crypto. You saw them move a lot of nominations and some legislation. And I think there's a huge question of like, all right, what are all the things that the House planned to do? And some of the members who were back yesterday, they were like, yeah, there are definitely things that we feel are now in the backlog that we're going to have to rush and push to get done. We'll be interested to see if they make some changes for their schedule for the rest of the year to try to get some of those bills in.
This is crazy, I think, when you look at what we've done in terms of a nation and really from a political standpoint, not a good look, I think. Well, DC never has a good look, but this makes it even worse. It also slows down what's really brewing, and that is the lack of the Clarity Act coming through. And I think what we might be seeing in the market is maybe forecasting that exact issue is that clarity may get pushed into 2026. One thing I want to showcase right here is I'm on the 15-minute chart for Bitcoin. Yeah, that's the Bitcoin chart on the 15-minute, guys. This looks extremely suspicious as we start to see these trade mechanisms moving down into, at time of recording, 98.3 on Bitcoin as we get a little bit of a move up and down. This is the kind of thing that I think a lot of people are going to probably be experiencing over the next few weeks, especially if we do see the Fed start to waffle a little bit on a potential rate cut. I'll talk about that in a second. Before we get into all that, of course, one of the bigger news items this week and today was that the XRP ETF now began trading in the U.S. with Canary Capital. This is a pretty big deal. These are the dates to watch for that we've just announced, of course, Canary being the first one that launched here on November 13th. You've got Franklin Templeton coming in possibly tomorrow or early next week. Bitwise on the 19th and the 20th. And then you get into 21 Shares, CoinShares, Grayscale, Wisdom Tree, all coming in later in November. The likelihood of getting more activity on XRP is real. Now, the real question is how does this sustain with what is happening in the rest of the markets as we flow in through November, especially with what's happening right now. Here's the flows for the Canary XRP ETF. Opening pretty strong in the first 30 minutes, stabilizing right now. We'll see how this holds up in terms of the Canary Capital XRP ETF, which is XRPC, if you guys are trying to track it out there. One thing we will take a look at probably early next week is see what the kind of performance is in comparison to BSOL, which was launched by Bitwise. This, of course, was Stephen McClurg coming on our show talking about that he thinks that the ETF could do $5 billion in the first month. Now, you got to remember, in that first 30 days, you're going to have 5 major ETFs launching, a lot of institutional capital possibly pushing into it. And the reality is, can it hold in a cycle where we may see a lot more volatility? Comparing that to when the ETH ETFs were launched, when Solana ETF was launched, those are the kind of things we're watching right now because capital flow will be a critical one. Larry Fink also is asking right now, Larry Fink is asking BlackRock ETF guys why they didn't file for an XRP ETF yet. And of course, now we are looking at possibly seeing even more activity within this. I think one thing you've got to compare to, and this is a good breakdown by Eric Balchunas over at Bloomberg, 26 million in volume, first 30. He says, hey, that's crazy. It's going to blow away. The 17 million guess, which is what he was kind of piggybacking on, has a good shot of beating Sol out, and that was 57 million on its first day. I don't know if it can sustain, but if it can, even at the diminished trading volume that we saw after the opening, it's possible that it could still make a run at BSOL on its first day one launch, which would be one of the biggest launches of the year. Other things, of course, playing out. Here is Matt Hogan. His median opinion of crypto assets does not determine an ETF success. And this is a good statement. You'd rather have 20% of the people love an asset than 80% of people kind of vaguely like it. Because this is showing, I think, the XRP army at work going into whether it's retail or even how they influence institutional capital to say this is one that you should keep, not end up trading in and out. Of course, my tweet right here, this was the calculation that we ran on it over a 6.5-hour trading schedule. That was it based on the first 30 minutes of volume, which was 26 million. That's where it could go. Now, will it hit that based on a little bit deterred volume later in the day? Probably not in that capacity, but hitting the 57 million will be a huge win for XRP. Solana Floor, of course, came in and said ETF data for the first 12 consecutive days. Solana ETFs now recorded 18 million in inflows, while Bitcoin and ETH saw combined outflows of 461 million. This is a pretty big deal because this is cumulative inflows to Solana have now reached 369 million overall. Absolute high performer in terms of ETFs. And I think institutional capital is starting to understand a little bit more about the Solana ecosystem and its power. The bad news side of things is this right here. The chance of a rate cut in December is now falling. And it goes to 56%, down from 71. We've showed this before on the poly market, and it's been up until we had the opening occur. Because remember, we reported earlier in the week, 72% was the holding position of a quarter basis points. And almost every analyst I have talked to, both on air and off, have been pushing to say the 25 is most likely going to happen. But yet, what we're seeing on poly market is a drastic reduction down to 52% probability, and the no change starting to look like it could flip as the primary indicator for poly market on the rate cut coming into December. That's happening on December 10th. We will air that one for sure. Other things to kind of consider, of course, is the death cross. Everybody kind of looks at that. This is, of course, traders looking at the 4-year cycle. If you kind of compare this in what we've seen over 2025, many would say right now that the top has already been in for Bitcoin. If Bitcoin makes a new all-time high after this death cross, this, of course, would break the cycle that everybody's been pointing to for quite some time. Now, you look at cycles and you have to wonder what the best investors out there are doing around this. Well, Michael Burry, one of the best investors, known from The Big Short, closes down his hedge fund a year in after acknowledging he doesn't understand the market anymore. That was his resignation letter, basically, to his investors saying, I think we're done. We're just going to liquidate and return all the capital, move right into it, and for a small audit, done for the day, and he's passing the torch off to one of his proteges. So I guess the question is this a new era of investors? Are we in an AI, innovation layer, much like we were in the new era of investors that started investing in internet stocks in the early 90s through the early 2000s? Are we back into that? Because remember, guys, that's almost 30 years ago when we started to see that kind of innovation once again. I want to go to a clip real quick. This is Jikh talking about investors and how AI plays in. Take a look.
How can a company with 13 billion in revenues make 1.4 trillion of spend commitments?
We're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer.
Then he says, the amount of money needed to build AI and make it profitable might only be possible if the government steps in and gets involved.
Some level, when something gets sufficiently huge, whether or not they are on paper, the federal government is kind of the insurer of last resort, as we've seen in various financial crises and insurance companies screwing things up.
So the market was like, wait, are you asking for a bailout? And he's like, no, I was just kidding. Right now, those companies are all being funded with a ton of debt. And for investors, that means for these companies to be as valuable as they are today, they have to be borrowing from a future that doesn't exist yet. Now, when you add all this up and you look at what some of the big investors have been doing, you might be worried. Warren Buffett, for example, just sold billions of dollars of stock, and he's now sitting on the biggest cash pile in the world. That doesn't look good. And Michael Burry, the guy who predicted the 2008 financial crisis, his fund, Scion, filed what's called a 13F form where it shows he's putting 80% of his portfolio betting against NVIDIA and Palantir. So all of this leads to the question, are we in an AI bubble? Data from Deutsche Bank says if it wasn't for AI spending right now, we'd be in a recession.
So what Andre was getting there is obviously, could a government bailout really start to more money into these companies, which are essentially potentially could be cash cows if we see AI take off. It's a big bet. And if you kind of compare this, I ran some numbers on this. This is in comparison to the .com era. And that was the era when I was a young engineer. I was working in Silicon Valley at the time and saw this. It was 95 to 2000 was really where the birth of that technology market was built on. It was when the internet was basically created. So you went from VC investments of around 7 billion in 95 to about 100 billion by 2020. Now, we all know what happened in 2020. That was about 80% of the late 1990s funding going into internet tech startups. Now, the comparison of that, because the NASDAQ composite went up 400% between 95 and 2000, then it had that absolute crash, which was the dot-bomb era that did occur. The difference between that era and where we are now is there's only a handful of companies right now. There's 5, maybe 6 good companies that I would say are living off of this kind of productivity and cash injection from all these VCs and big money investors. Versus back in that era, it was hundreds of companies that were getting that kind of injection. So that would be the big difference there. But if you compare that in the parallel of where we were then to where we are now, based on inflation, it has a lot of similarities in comparison to the dot-bomb era. So I don't know that it's a bad thing. I do not agree with the idea of a bailout, with exception of one thing. And that, of course, would be national security. If we see that on the global stage, we're seeing things happen in other countries, okay, I would agree that maybe there's something there. Just, if you think about it like Boeing or something like Lockheed Martin, I understand if it's a defense mechanism, which is, I think, eventually where this is going. So not a good sign right now as we start to look forward. Let me go to a couple other points I want to hit on because this is important as we look into this. Because this is Stanley Druckenmiller talking about that, because this is all building around the investors that are trying to go into this market right now. And it's basically saying Burry shutting down Scion doesn't necessarily mean he's leaving the market. It likely means he's changing the arena. I get it, because this starts to get into a whole new crop of investors looking at the way the market will move. And it's very difficult to understand this kind of scale in only a handful of companies, a dozen companies right now controlling the S&P 500. That is why I think we're starting to see guys like Burry kind of throw in the towel. Institutions also have to stake ETH on a decentralized infrastructure for this to work. A couple of points within the article. A green light for institution staking alone will not signal a long-term future for ETH, unless institutions can embrace the philosophy of decentralization. This, to me, is absolutely what is going to happen, because I think there will be institutions out there that will try it and will fail, and then there will be institutions out there that will try the decentralized model of where ETH is going, and they're going to win. Now, whether it's the old guard or it's a new guard that starts to develop this, that's going to be the real question. Much like what Burry's talking about, leaving because he doesn't understand the market. And I think that's where we are right now. It is a major shift, a major financial shift. It's exactly like Dotcom. In that era, it was a major technological shift for society to see the internet being born. I think we're in the same place right now, but it's only the internet of payments. You got the Cash App, of course, coming in and saying, hey, we're going to do stablecoin support now, launching in 26, I think is what he means there. Not Bitcoins, but stablecoins starting early next year. Cash App's 58 million users. And this is in comparison to PayPal. PayPal's like 450 million users, so it's not a huge, but it is a big deal going forward in the fact that it could start to trickle in to a lot of payment providers and also apps that will start utilizing stablecoin. Of course, that's big for Ethereum. One thing, though, you do have to look at is what's happening right now with Uniswap in terms of what we will see on companies being able to raise capital. What I mean by that is ICOs, because this could really put some pressure on Coinbase and others out there. What Uniswap is doing with this fee switch is a big deal. It's unfortunate the market is in the position it is right now to really appreciate what this is doing. I know many of you probably sold your Uniswap after that big run up, and maybe now is a good time to jump back in. We'll see. Of course, other things that are happening is you've got banks piloting stablecoin-led tax refunds. That's right, tax refunds coming in right now in South Korea, and they're doing it on an Avalanche. This would get interesting if the Trump administration came up with something like this, where it was instantaneous. That could be a little bit of a stimulus to the market and also could set up the ability to do blockchain payments from the federal government. Now, I don't want to say the word UBI or I want to say the word of how you might get stimulus, but that could be one of the models. And of course, all that could be looked at on something like Avalanche. And if you look at this right here, here's AvaCloud talking about this. Refunds without paper forms, kiosks, delays, all that, boom, done. And of course, they're doing this in collaboration with MasterCard, Fireblocks. So a lot of big players on this. If you take a look at the charts real quick, we'll look at, as I just showed you, Bitcoin. I want to show you ETH holding almost in the same position, guys. Something fishy is afoot right here. Let's take a look at Solana. Interesting moves in the market right now. Avalanche going down to 1590. A little bit more consistent there. Chainlink also dropping into its low at around 1420. You can see the market is really starting to see some big pressure right now as stablecoin dominance continues to move up. So be ready, guys. This could either be a spot in the market to look at dollar cost averaging, or it could be a spot in the market that starts to move us into, dare I say, a bear market going forward. You guys don't want to miss all of this and more, because we're going to be covering this along with a lot more as we start to really check the barometer of where the market is going in the next few days. It's going to be very critical over the weekend. Join the Diamond Circle. It's absolutely free. Click the link down below. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show. it.